Good morning, everyone, and welcome to today's edition of Frontier Opening Bells. I am Bosin Amafaye. It's Thursday, the 11th of June. Let me introduce my panelists today. Of course, let me start with Serge Strubens, who is the director in charge of operations for Europe, Middle East, and North Africa at the Institute for Economics and Peace. Serge is joining us from Brussels. Thank you very much. Good morning to the show, Serge.
Good morning.
Thank you. Serge works for the Institute that released the latest Global Peace Index report for 2020 and the impact on the global economy, in particular Africa, and of course, drilling down to South Africa. That will be a big conversation this morning. Let me also introduce other panelists. Ayode Giebro is a trader, a chartered trader, and the CEO at Afrinvest Securities. He'll be weighing in on this conversation as well as the Nigerian market. Thank you, Ayodeji. It's good to have you on the show.
Nice having you.
Very quickly as well, Uche Naminis is an FX trader and a managing partner at Blue FX Nigeria. Uche Naminis, thank you so much. Good morning. Welcome to the show. The global markets look in the red territory. Oil prices down, gold, aluminum, platinum. It looks like the Fed, the US Fed yesterday spoke to global markets with those minutes with a meeting with the FOMC and the outlook on the U.S. economy. Today, we're expecting the U.S. Jobless claims and the continuing claims out of the U.S. Out of South Africa is the mining production data and the South Africa manufacturing production data. That will also be very key to our conversation today. But let me also introduce Ali. Ali Khan Sacho is the rich man of Rich Frontiers Management, the founder and CEO. Joining us as always every morning from Nairobi. Thank you, Ali.
Thank you.
Okay, I think we should yield the floor very quickly to Serge, but just before that, let me give you a very 30 seconds roundup of the yesterday's key African markets, largely in the negative territory, tracking the rest of the global slowdown that we saw at the equity space. Continuing this morning, Nigerian market is down 0.47%. The Ivory Coast BRVM was a little bit 0.06%, just tracking the previous session. The Egyptian market was much deeper, 1.10%, as much as the South African market, 1.49%, while the Kenya in the East Coast managed a 0.69%. We'll talk about a bit of this later. Take that away. Let's talk about the Serge Strubens report and the rest of his team. The Global Peace Index showing violence globally costs 10.4% of the global GDP. South Africa is leading the homicide rate in sub-Saharan Africa after Lesotho. Let's listen to Serge. Give us a summary of this report, Serge, about the overall, globally speaking, then drill down a little bit into the African space for us.
Well, thank you very much for having me this morning. What we have seen last year is a decrease in the levels of peacefulness by 0.34%. That doesn't say much, but you know, when we open this over a period of 12 years, we have seen in those 12 years that peacefulness has decreased for 9 out of those 12 years. The motives for this decrease was conflict, mostly concentrated in the Middle East and Northern Africa region. What we also saw over the past decade is civil unrest globally doubling in number, and you know, riots going up by 280%, general strikes going up by 820%. What we have also seen is a dramatic decrease in the impact of terrorism, 75% last year, and really, or since the peak in 2015, a dramatic decrease, really going from 33,000 deaths in 2015 to 8,000 last year globally. So that is very positive. When we look at the drivers for this evolution, we see, of course, that conflict has grown over the past 10 years. We see that the internal security and safety remained at the same level. And then we also see that militarization was basically the group of indicators, the domain of indicators that improved over the past 10 years. Now to look at, I would say, Africa, we have designed two regions in Africa, the Institute for Economics and Peace. So Middle East and Northern Africa, this is still the least peaceful region of the world. We see a slight improvement there, but still. And Sub-Saharan Africa recorded last year a slight fall in peacefulness. and really 20 countries in the region improved while 24 deteriorated. When you want to talk about South Africa, basically we have seen that the three largest improvers in peacefulness in sub-Saharan Africa last year were South Africa, Cote d'Ivoire, and Equatorial Guinea. Maybe one last point about the headlines that you proposed. It's about the homicide rate, and really the South Africa there is going against the global and general trends. We have seen this indicator decrease globally last year, but over a larger period of time. That's not the case in South Africa when we see an increase in the number of homicides, and that's against the global trend.
Interesting overview. Thank you very much, Serge. So let me ask Ali, in terms of the numbers. So if you look at South Africa and the rate of violence, the homicide and all of that, how much of these lack of peace, generally speaking, among the people and all of that, actually flow into business and the economy?
That's a very interesting question. I mean, South Africa has always been extremely high on homicide rates. I think this was a consequence of apartheid and the spillover from that period. And the numbers, from what I can gather, haven't come down. But somehow, it seems that South Africa, until recently, was able to attract a lot of FDI. It was a relatively sophisticated economy in comparison to the rest of sub-Saharan Africa, sophisticated banking sector, sophisticated stock exchange, and so forth. But it is a dichotomy that has been there for quite a while. And I think Serge is pointing that out to people. You've got a society which seems to me to be quite fragile. The equilibrium is quite fragile, but somehow, until now, it has not sort of spilt over. But this is a risk that quite often people tend to miss when they look at South Africa and just look at those sort of South African assets and investment opportunity, particularly globally, Boasson, because it tends to be a reflexive reaction when people feel like taking on risk in New York or London. The first place they'll reach for is South Africa. But obviously the reality that Serge is pointing out is very interesting. And just one other point, Boasson, from that report, I looked at the sub-Saharan African trend line that Serge pointed out. I mean, that was something like 600%, Serge, I think, if I remember, or even 800, I can't remember, growth in riots and in insecurity over since 2011. I mean, that's phenomenal as a statistic to me. And it suggests that, the problem is actually Africa-wide, and we've got a burgeoning problem.
Yeah, we got a bigger problem on our hands, Ali, Serge, and everyone, and that's COVID-19, adding to the problem of violence and lack of peace in Middle East, North Africa, and in Southern Africa. And of course, the report by Serge and his team in Brussels also shows that Liberia in West Africa is beginning to heat up a little bit again. And memories of the late 80s, early 90s Liberia civil war is still there. But let me ask Ayodeji, who is the CEO at Afrinvest Securities. He's sitting here in Nigeria, so he's very familiar with the Boko Haram and how much Nigeria is spending in terms of military security and how that is affecting companies' earnings and, of course, Nigeria's budget. Ayo.
Yes, thanks. I think this is a very important topic to review. If you look at in the past few years, we've continued to see the increasing impact of the homicide and the killings that we've been seeing across. So we are going to look at, if we look at it, especially in Nigeria, the impact that we are seeing, food security, it's beginning to impact in terms of farming. And as a result of that, we can see the spike, food inflation that tracks the prices of food. We can see that continuous increase in that space. Beyond that, that distribution channel, so across the northeast, for most of the companies have had to shut down, and they are unable to distribute products to that area. If you check from some of the quoted companies, distribution to those areas impacted initially when it started at the peak of it, impacted on their earnings because they could not send goods to that part of the country. So overall, we can see that impact of insecurity, killings, also affecting FDIs. So beyond the policy, insecurity is a major factor that scares away potential investors because beyond just the killing of Boko Haram, we have kidnapping even across the southern area, and when you hear the ransom they even ask for. So it's critical that this is being reviewed, and for any country that wants to enjoy foreign direct investments, wants to see how the economy grows, security is also very key. You highlighted it in terms of the spending, which has been significant, but we may say they've achieved results to a certain level, but that killings will still very prevalent that it needs to be totally taken care of.
Okay, I'm going to thank Uchenna for a minute intervention here. Is any thoughts that I'm going to ask Serge again to drill down on how COVID-19 is impacting this latest report and what will likely change in 2020 report, which will come out next year, because they will have the full impact of the pandemic, globally speaking. So we're just scratching the surface, as it were, right now. Uche, what are your thoughts?
Sorry, so your question again, please.
Yeah, the question is, what are your thoughts around this Global Peace Index report in terms of how much violence in South Africa and elsewhere are impacting investments, and in Nigeria, of course, where you reside?
Right. So having things like unrest, as Serge has mentioned in his reports, Global Peace Index sort of increasing, and in summation with COVID also, this has sort of started to give this, should I say, sentiment in terms of for investors to keep funds aside and not take risks, given the high level of this unrest and the elevation of peace deterioration in different countries. In Africa, we can see, Nigeria to be precise, we can see Boko Haram, as Ayodeji has mentioned, has sort of, in a way, impacted companies across board that are sort of in terms of manufacturing of food, and also investors that are looking to come into the space, trying to highlight and place on the possible unrest which is happening in the northern area. So there is always going to be the issue of the social unrest. There's always going to be the issue of peace and how it directly sort of affects FDIs and FPIs.
Okay, so thank you, Uchenna. Let's talk about Serge. Get back on the conversation around the COVID-19 and how much impact this will have on the already fragile situation of global peacefulness.
Well, COVID-19 will affect negatively political stability, the international relations, civil rights, violence. That's for sure. I mean, the tensions that led to the decrease in peacefulness in the past 10 years are still there, are not resolved, and COVID-19 is just going to put a magnifying glass on it. What we are going to see is also continued trend of civil unrest, and it will even increase. We really have two types of countries: those who will be able to cope, that the good, positive peace, and I would say economic preconditions for the crisis, and then those countries who did not have. We did a study on this called COVID-19 and Peace, in which we really looked at those preconditions: a low level of unemployment, a low level of debt, a low level of dependence on international trade, and then we also looked at the percentage of taxation in your GDP. And so countries that were not doing well on those preconditions, and also we did not do well on positive peace, are those countries most at risk.
Now, interesting, Africa's conversation around Africa's debt level is going on at the IMF, the World Bank, the FDB, and other organizations talking about how we need to deleverage Africa's debt portfolio so that some of these resources that are being brought in all around the world, the G20 and the rest, can help the poor families, poor households, allow Africa to invest in education, in healthcare, in things like that, social development that are lacking. Now, with insecurity on one hand, now we have COVID-19. So if you look at Nigeria, the central bank is pouring billions with a lot of other donation, billions of naira and trillions more into COVID-19. And everyone is talking a little bit less about the spending into insecurity. So this is going to be a very serious issue moving forward, Serge, for Africa.
Well, I think you're absolutely right to say that, international solidarity and international cooperation should be at the heart of the solution for this economic crisis. This economic crisis much larger than the one we had in 2008. In 2008, about $15 trillion were poured into the economies. The same amount has already been poured in the world economy, in different economies today for the COVID-19 crisis, but this is just emerging. So this figure is going to be much larger in the coming weeks and the coming months. The only negative side that I see to this is the impact that COVID-19 is going to have on international relations and basically exacerbate I would say, the downfall of multilateralism that we already have seen before. So I don't really see an incentive for more international solidarity and international cooperation, but I absolutely agree with you that the World Bank and the IMF should try to find a solution for the situation, especially in a country like Africa, or a continent like Africa, sorry. Maybe two more points. I mean, you pointed out, of course, violence, you pointed out COVID-19. I would also like to point out climate change and the effects of climate change. So we have also seen in the Global Peace Index that this is going to have a large impact on populations, especially in sub-Saharan Africa. So we have determined that by 2050, climate change would create about 143 million displaced persons and refugees, of which 86 million would come from sub-Saharan Africa. So that's really another main strategic factor influencing peace and stability in your region.
Very interesting. So let's talk about the markets here. Ali, South Africa. Let's talk about Southern Africa. Ali, coming in here, the business confidence, the mining production data will be out today. The business confidence came out yesterday, 45-year low for Africa's second largest and most advanced economies in the market went down south. You have a minute here. Ali, weigh in on this.
So basically, I think just following on from what Serge has said and playing into that, some of the points he made, this full-scale quarantine that we saw in many African countries, including South Africa, obviously brought these economies to a complete hard stop. That's why you got that number yesterday, which was an all-time low number. They've never had such a low number. It was 5, I think, on the index, lowest since 1975, which is when records began. And therefore, what's interesting to me, also just to touch on segueing from Serge, is really the way Western economies responded, like Europe in particular. They could afford to lock down their citizens because they made payments, were able to afford to make payments to them, more than subsistence payments. Whereas here in Africa, the problem is this whole lockdown is cratering our economies. It's causing civil unrest. If you looked at reports coming out of Kinshasa yesterday, there were riots, 3 people died. This is going to spread like wildfire. So we're in a kind of a vice-like grip. We can't stay locked down. We have to open up. And we are simply not putting the money to work to deal with this problem. I mean, testing levels are pathetic. Our governments don't know the scale of the problem in most places. It's a matter of extrapolation. Much of the money has been diverted to budgetary support because we're essentially maxed out on our balance sheets. So when I look at it like that, I'm really worried. I really am. And the same people who kept telling us we haven't got a problem, we got more room on our balance sheet, let's keep going, who borrowed $600 billion, much of it is not even returning a positive rate of investment, are the same ones who are meant to lead us out of what to me is COVID-19 a multiple circuit breaker is the way I see it. And I'm just very, very concerned.
Okay, let's touch on a bit. Thank you, Ali. You got about a minute later to talk about the Kenyan market and the East African markets. But again, let me ask Ayodeji to weigh in on the Nigerian market. Yesterday, it looks like the Treasury Bills auction of yesterday shows that rates are still at a very low level. So key question I saw on social media, on Twitter, is it really still profitable to invest in Nigeria Treasury Bills? Ayo.
Yes, very interesting question. What is really happening, which we highlighted yesterday, was that the amount of the availability or the options that are available to most of the fund managers are limited. So rates, you would see if we look at the subscription yesterday for the 364 days, we had over 114 billion that was struggling to get allotted. And at the end of the day, government allotted about 78 billion. And when you look at something interesting, is also good to highlight is the range of bids. It's around 3.5%. So investors were willing to still invest for 1 year at 3.5%. Because when you look at Treasury Bills investments, they are risk-free. We know the potential of default is very low. So for investors that are not willing to take any risk, they will still continue to invest in Treasury Bills. When you compare it now with savings rates, because I also saw that on Twitter, and if you know, savings rate has been, CBN has benchmarked savings rate to 25% of MPR, which is currently around 3.3%. So you can, for some investors would be, some of the bank customers would be willing to have their funds idle in their savings account and earn 3% than invest it in 91 days and earn 2%. So we're we're just seeing this recently, and the yield environment has significantly changed. So we'll continue to see that interest. Currently, even within the formal market yesterday, because of the illiquidity, low level of liquidity, about 160 billion, we didn't see a lot of activity within that market. But by and large, we'll continue to see investors take position in Treasury Bills. For those that are willing to take on more risk, would also consider commercial paper, which has a little bit of premium on it relative to government securities.
And we saw investors, diving into the 100 billion MTN commercial paper, which was closed a few days ago. So Uche, let me ask Uche now, how much dent do you think the Fed meeting and U.S. economic outlook of yesterday has done to the global markets this morning?
I think what the Fed sort of highlighted to the market is saying that, well, in should I say max terms, that honestly we are not looking at any immediate recovery of some sort. We are just continue to be providing accommodative policies, because he has said that they will keep rates at zero up until 2022. He mentioned in a way and said we are not even thinking of raising rates. So that was sort of quite significant for the market to see how dovish the Fed is kind of leaning. They've also said they would increase their treasury holdings in their current peso amounting to about $80 billion per month. And that in itself is saying that, well, guys, there is no near-term positivity, although it's looking like the market is rebounding, but with what the fundamentals are saying, is still a very high deteriorating, should I say, risk in the market, and they will continue to be providing that support and that stimulus. That in itself is not looking so good on the US dollar, given the fact that the excess supply and the continuous printing from the Federal Reserve is supposed to cause that supply shock into the US dollar. But what we're seeing here is, if you compare the US dollar and the rest of the world, you will see that there is still a high growth differential between these two, should I say, zones. And we are still getting the possibility that irrespective of how the Fed is accommodative and how aggressive they are easing, we'll still be getting that capital inflow into the US, and that in itself would cause that bullish sentiment in the US dollar. And a positive, a strong US dollar at this point and this time is not good for the rest of the world. It's really, really detrimental for frontier markets and emerging markets to be specific.
Oh, great, Uchenna. We're going to go for our final round, but I'm going to ask Ali for about a 30 seconds, 45 seconds overview of the Kenyan East African market.
So in East Africa, obviously it's budget day. So all the East African governments are going to be announcing their budget for the next full year. And obviously, given that COVID is very much a circuit breaker, and most predictions are that we're going to eke out a marginal positive rate of GDP, which I frankly think is optimistic. The question is going to be around the budget, how are we shoring up the revenue shortfall, and how are we going to maintain funds into this sort of health crisis? So I think the market will be focused on those budgets and looking to see what rabbits our various cabinet secretaries can pull out of the hat.
Ali, and that illicit trade report yesterday was a punch below the belt.
Yes, it was. I mean, we've known the illicits have been a very, very big problem across this region and all across the board. And I think just seeing that number, which was quite dramatic, close to $1 billion, signals, well, you know, that's actually low-hanging fruit. If we had better enforcement, you can imagine there would be a lot more money to collect. So the question is, one can look at it negatively, but also positively. There's $1 billion out there that if they looked at properly, they'd be able to collect.
Okay, great. So let me ask Serge to give us the final word on the program this morning with the Global Index. What's your outlook for 2020 when the 2021 report will be released?
Well, as I said before, the tensions that existed, they will just be magnified by COVID-19. And civil unrest will continue to grow and will continue to turn violent, especially those countries which will have more difficulties to cope with the economic downturn of both the lockdown, but also the economic crisis afterwards. I think there is also a risk to see globally less money flowing to international development and international aid budgets, because, you know, the main donors will redirect these financial assets to prop up their own economy. And I think maybe one advice would be to invest in positive peace. It's a high peace concept to create, maintain, and sustain peace, but also to get the economic, social governance and ecologic benefits of a more peaceful situation. So we have quantified at IEP that an increase of 1% in positive peace equals an increase of about 3% in GDP. So you don't have to invest only in your economy to save your economy. You can invest in peace also, but get the economic benefits. And maybe a last figure for this morning. We spoke about the global impact, the global cost of violence, and this is about 14.5 trillion US dollars per year. It's about 10.6% of the world GDP. Just imagine what you could do if you would reduce this by 1 or 10%. 1% of the total cost of violence equals the global budget for foreign aid and development. 10% of the annual cost of violence equals the annual foreign direct investment budget. Just imagine what you could do if you would reduce the cost of violence by 1 or 10%. Thank you very much.
We just go on imagining those heart-rending figures in economic and market terms for the rest of the day. Thank you so much, Serge Strumans, the Director in charge of operations for Europe, Middle East, and North Africa at the Institute for Economics and Peace team in Brussels. Thank you very much for coming to discuss this with us on the show this morning. Thank you very much, Uchenna Minis, the managing partner at Blue FX Nigeria. Ali Khan Sacho, thank you so much for coming in from Nairobi, Rich Frontiers Management, and Ayode Chiebo, the CEO and chartered trader at Afinvest Securities Limited, also here in Lagos, Nigeria. Thank you, everyone. I'll see you again tomorrow. It's going to be a public holiday in Nigeria tomorrow, but the market for Africa remain open. So I'll see you again tomorrow here on the show. Have a good day.